let's begin with intraday numbers coming from the stock markets we track in Africa, and they're mixed at intraday, with Nigeria's all-share index trading 0.37% higher. In South Africa, the index was down over 1.5%, while the EGX 30 was 2% positive. The Kenyan Bourse closed down 2.07% on Tuesday. In the Middle East, the markets were also mixed, with Abu Dhabi and Dubai indices down 1.56% and 1.03% each at intraday. In Qatar, the index was, however, up over 0.5%, while the Saudi Tadawul was 0.19% positive at intraday. Let's move to Asia now, where stocks were mixed on Wednesday as countries in the region continue to put measures in place to battle the coronavirus pandemic. In Japan, stocks saw a turnaround after an earlier slip, with the Nikkei 225 rising 2.13% to close at 19,353.24, as the shares of index heavyweight fast retailing surged 7.7%. The Topix index also gained 1.59 to end its trading day at 1,425.47. Mainline Chinese stocks dipped, with the Shanghai Composite down 0.19%, while the Shenzhen Composite slipped 0.156%. Hong Kong's Hang Seng Index also shed 1.29%, as at its final hour of trading. In South Korea, the Kospi closed 0.9% lower at 1,807.14. Meanwhile, stocks in Australia fell, with the S&P ASX 200 closing 0.86% lower at 5,206.9. Let's turn now to the UK, where Juliana Olayinka is standing by to bring us up to speed with intraday numbers and key headlines driving today's markets. Good afternoon, Juliana. Well, let's begin our conversation with intraday numbers. Now, tell us what the markets, what the numbers are looking like and their drivers.
Busy. Well, the FTSE opened in the red, and in the afternoon it's still in the red. Intraday, the all share is down by 1%. The FTSE 100 is down by just over 1.5%, and the FTSE 250 is down by almost 0.5%. In currencies, the pound also down on the dollar by 0.04%, down on the euro by 0.14%, and down on the Japanese yen by 0.02%. Now, yesterday the FTSE had a great day, up by about 200 points, and that was really because news that we had over the weekend seemed to point to the fact that the hotspot, the COVID-19 hotspot, which is now decidedly in Europe, could have been declining, but of course those numbers changed over 24 hours. In New York State yesterday, in New York State alone, over 800 people died. And then we had that 27 Euro finance ministers meeting where there was supposed to be some sort of consensus about how the bloc was going to tackle COVID-19, but alas, after the marathon session, there was no deal struck, and that's causing a frenzy on the markets.
Juliana, why is Tesco asking people to visit stores to get food in spite of the coronavirus outbreak and the lockdown?
Well, this is quite interesting, actually, and it's really because Tesco's struggling. They've admitted today that the 30% increase in sales that they saw during the time just a couple of days before Prime Minister Boris Johnson told the country that they'd be going into lockdown. We saw varied scenes of people panic buying, overloading their trolleys, which did seem to be good for supermarkets in their budget, but not great in terms of their stockpile. And Tesco announced that they've lost heavily amounts of stockpile, and at the moment their online capacity can only take up to 10% of orders, which is why they're telling people they must come in the store. They also added over 145,000 new slots to their online delivery service, which shows just how in demand that service is. And yes, they're struggling. Today they released their full-year year update, and the chief executive, Dave Lewis, did say that he expects Tesco, which is Britain's largest supermarket, by the way, to be hit by the COVID-19 pandemic to the tune of £950 million. Tesco have about 330,000 staff dotted around Britain, and apparently 55,000 staff members every week have been calling in sick. Either they are self-isolating because family members are ill, or they have COVID-19 themselves. And they've got quite a brave policy where anybody who is sick will be receiving full sick pay. And Dave Lewis has announced today that that's going to cost them nearly £1 billion.
Now, here's one good thing coming out of the lockdown. Now, air pollution levels in the UK is set to have dropped significantly in the 2 weeks since the country went into lockdown to stop the spread of COVID-19. How does it feel to breathe fresh air coming to work, Juliana?
How does it feel? To be honest with you, Bissy, I haven't really noticed that myself. But look, you know, there's got to be a silver lining with the fact that so many people are not travelling. This information has been released. Air pollutant monitors have been looking at the data, and really they're focusing on nitrogen oxide, nitrogen dioxide. I know the scientists will get me on that one. This is what comes out of car exhaust pipes, and it's down 60% year on year. And again, that's because, of course, we've got much less cars on the road. It's only happening now, but a lot of campaigners are saying this is really good. At least, you know, they want the lockdown to last longer because it can potentially have cement itself on keeping the planet cooler, because nitrogen dioxide is one of the main components to warming the planet. So the conclusion is that less traffic leads to cleaner air, Bissy.
Many thanks, Juliana. If it is obvious, we'll see you again tomorrow.
Thanks.
U.S. stock futures in early morning trade pointed to a largely unchanged open on Wednesday, continuing a volatile week for stocks gripped by the coronavirus shutdown. The Dow futures were 41 points higher in early trade, showing an implied opening drop of about 11 points on Wednesday. S&P 500 and Nasdaq futures also pointed to a largely flat open. And oil prices steadied around $32 a barrel today, supported by hopes that a meeting between OPEC members and allied producers on Thursday will trigger output cuts to shore up prices that have collapsed due to the coronavirus pandemic. Brent crude was 0.44% up at about $32 per barrel after falling 3.6% on Tuesday. U.S. crude rose 2.79% to $24.29 a barrel. Thursday's video conference meeting between the Organization of Petroleum Exporting Countries and allies, including Russia, is expected to be more successful than their gathering in March, which ended in a failure to extend supply cuts and a price war between Saudi Arabia and Russia. Crude has collapsed in 2020, and that's because of a slide in demand due to the coronavirus outbreak and excess supply. I return to South Africa now, where the business confidence dropped to a 7-month low in March as the economic impact of the coronavirus pandemic on the country and its trading partners became evident. According to the SA Chamber of Commerce and Industry, the index fell by 2.8 points in March to 89.9, and that's its sharpest month-on-month decline since August 2019. This comes after an uptick of 0.5 index points in February. According to the Chamber, the exceptional negative monthly impacts on the country's business confidence stemmed from a combination of lower number of new vehicle sales, the weaker exchange rate of the rand against major trading currencies, and lower share prices. The Chamber says the decline does not yet fully reveal the extent of COVID-19's impact on the economy and the business climate. And data from Egypt's central bank shows the country's net foreign reserves dropped to $40.1 billion at the end of March from $45.5 billion in February. The fall in reserves follows a steady upward trend in the previous months and comes as Egypt tries to cope with the economic impact of the coronavirus outbreak. Egypt, like other countries, has been hard hit by the spread of the virus, which has wiped out its vital tourism industry and prompted authorities to close airports, restaurants, firms and shops and to impose a night curfew. But analysts say the economy will witness a strong start if the crisis ends globally, backed by some of the government's decisions, which will have a significant impact after the end of the situation. In Zimbabwe, severe shortage of US dollars is set to worsen as the coronavirus threatens the start of sales of tobacco, its second biggest source of foreign exchange. The Commercial Farmers Union says the people that provide finance to tobacco farmers did so until the end of March, with expectations that from April, debts are being serviced. Like its neighbors, Zimbabwe has imposed a 21-day lockdown to halt the spread of the virus, which has shuttered mines, while remittances from abroad have also declined. The International Monetary Fund said in its latest Article 4 report that the country had 109 million in foreign exchange reserves, enough for just 1 week of imports. Zimbabwe is Africa's biggest tobacco producer, and the crop, which brought in $523 million in income last year, is the nation's largest source of revenue. All right, let's go to Europe now, turning attention to the markets where the numbers actually came in lower this morning as optimism over an imminent recovery from the coronavirus started to fade. Conrad Wilson joins us now for more headlines from the European space. It's good to finally see you, Conrad. So Germany's leading economic research institutes have come out with their spring report in a live stream press conference. Now, how bad is the economy going to be hit by the corona lockdown?
It's going to be bad, and of course everyone is now discussing on the markets what kind of recovery we are going to see of the German economy after the corona crisis is over. Is this going to be a V-shaped or is it going to be a U-shaped recovery? And well, the German researchers said that we're going to see a mixture of both, probably a decline of GDP, of gross domestic product, a contraction of our economy this year by 4.2%. But the researchers also are predicting that next year we'll see a strong recovery of 5.8%. Now, of course, there are a lot of question marks attached to this forecast. The researchers also are still seeing a relatively small possibility that we might see an L-shaped recovery, you know, which will basically not be a recovery at all, a slump now, and then a very, very long time with very little or no economic recovery. That, of course, is linked to how strongly the pandemic will still develop, whether we might see a second wave of infections, and how smoothly a return to normal might eventually happen of the economy here.
Let's talk about Lufthansa now, which has become the first major airline group to announce permanent cuts to its operations driven by the COVID-19 pandemic. Is Lufthansa likely to be the only carrier to shrink permanently?
It's very likely that we are going to see more. You know, even before the corona pandemic, the sector had large overcapacities, you know, too many airplanes flying around half full and not very profitably. And the financial power of airlines is, generally speaking, not very good. IATA, which is the International Airlines Association, says that only 30 of its 300 members have the money to survive longer than 2 months without being in operation. So we are going to hear a lot about financial trouble in the sector. Of course, at the moment, all the airlines are anxiously waiting to see when and how the worldwide travel bans between most parts of the world will be lifted. And what also would help, of course, airlines is a more generous refund policy, generous from the point of view of carriers for those canceled flights due to the pandemic. At the moment, all over Europe, the airlines have to cope with huge amounts of claims by passengers for flights that didn't happen.
All right, Conrad, thanks for this update. We'll see you again tomorrow. When we return in just a moment, a look at the situation in Kenya with the lockdown in some parts of the country to curtail the spread of COVID-19.